Tax rates are supposed to benefit the working class and make the upper class pay their fair share of income to society. But what happens when a government makes false promises to change tax cuts in order to supposedly benefit the working class, but end up doing the opposite? As you will come to find out, deceitful actions result in subpar outcomes. Unless you have been living under a rock for the past week, you'd know that the Australian Labor government has planned to change the Stage 3 tax cuts. This adaptation of the tax cuts breaks their election promise to not change the tax cuts, in a specific attempt to provide bigger tax cuts for Middle Australia to help with cost of living, while making our tax system fairer, as Prime Minister Anthony Albanese explains. However, when we do a deeper analysis of these changes, we find they don't actually benefit the poor as much as people would expect, and actually line the pockets of the rich. To delve deeper into this analysis, we first need to understand these tax cuts. As pointed out by the ABC, these tax cuts are the third round in a series of tax changes introduced by the then coalition government in 2018 and 2019. Back in 2018, the coalition government implemented these tax cuts in order to reduce tax for the majority of individuals, simplify the tax system, and protect middle-income earners from bracket creep. After Stage 1 and Stage 2 tax cuts were implemented in 2018 and 2019, respectively, the coalition government then planned for a third stage of tax cuts due to take effect on July 1st of 2024. Going into the federal election, the current Labor government made a promise to the Australian people that these tax cuts wouldn't change. However, as is typical for the Albanese government, promises are made to be broken. The Stage 3 tax cuts have been significantly modified in an attempt to help the middle class of Australia with the cost of living crisis. Coincidentally, these tax cuts are supposed to help the majority of Labor Party voters within Australia, but that is a topic for another day. Previously, the tax brackets were as follows. Earnings up to $18,200 have no tax. From there, each dollar earned between $18,201 to $45,000 is taxed at 19 cents per dollar. Each dollar earned between $45,001 to $120,000 is taxed at 32.5 cents per dollar. Each dollar earned between $120,001 to $180,000 is taxed at 37 cents per dollar. And each dollar earned above $180,000 is taxed at 45 cents per dollar. Now these tax brackets have been changed to the following. The first tax bracket is still tax-free. From there, each dollar earned between $18,201, $45,000 is taxed at 16 cents per dollar instead of 19. Each dollar earned between $45,001 and $135,000 is taxed at 30 cents per dollar instead of 32.5%, with the threshold increased by $15,000. Each dollar earned between $135,001 and $190,000 will be taxed at 37 cents per dollar, increasing the tax threshold on the lower end by $15,000 and on the upper end by $10,000. From there, any earnings above $190,001 are taxed at 45%, a threshold increase of $10,000. All of this means that a person on an average income of around $73,000 will get a tax cut of $1,504. That's $804 more than they were going to receive under Morrison's plan. On the surface, this seems all good. The middle class receives more cost of living support compared to the previous tax cuts. However, when you dive deeper into what the money will be spent on, you realize that these tax cuts don't actually benefit the middle class. Simple research will tell you that there are three options that each person can choose to do with their money. They can save it, invest it, or buy goods and services with it. Looking deeper into these options, you realize that in the end, the circular flow of money ends up lining the pockets of the rich more than they're disadvantaged. Think for a second. What tends to happen when individuals find themselves with extra funds? They often indulge in spending, treating themselves to well-deserved rewards, or purchasing goods and services they may not necessarily need. Consequently, this money is circulated back into the hands of corporations and the affluent, precisely those from whom the Labour government aimed to extract more funds. Even if the average person refrains from immediate spending, the alternative choices of saving or investing contribute to a cycle that ultimately benefits the wealthier segments of society. When money is saved, banks can lend it to investors at more lucrative rates, allowing both the investor and the bank to reap financial gains. Unfortunately, the true losers in this scenario are the savers and middle-class workers. Opting to invest the money follows a similar pattern, with wealthy companies using the funds from working-class citizens to enhance their businesses. Unless a substantial amount of money is consistently invested, a luxury most middle-class individuals lack due to financial constraints or a lack of financial education, the real winners remain the businesses themselves. Rather than championing the cause of the middle and working class, the Labour Party has chosen to foot the bill for the average affluent individual's next rental property, business venture, or vacation. Imagine this: instead of addressing economic issues, the Labour government has opted for a misguided approach. If they truly understood how to stimulate economic growth, they would have heeded the coalition government's plan and increased tax cuts for the upper class. Unfortunately, when a political campaign is built on false promises and deceitful tactics, the outcome is bound to be disastrous. Most upper-class citizens either own a business that makes a significant profit or own investments that return profits. After all, most average people can't become upper-class citizens without some sense of financial education. Maintaining the same tax cuts for the upper would increase investment from those citizens into businesses, thus allowing for those companies to create greater products, research better materials, and more. Doing this would consequently foster greater competition amongst corporations, theoretically lowering the cost of goods and helping to alleviate the cost of living crisis. It turns out that when you help the people who make the most money and understand the economy the most, generally, a significant portion of the population benefits. Ultimately, lowering tax cuts for the upper class and increasing the tax cuts for the middle class is an idea built upon a deceitful lie and is always going to fail. On a side note, it doesn't matter what the Albanese government does to tax the rich more, or any government for that matter, as the capitalist system in which we live in is designed to benefit those up at the top. If you would like to understand further how capitalism's taxes and other methods designed to close the gap between the rich and poor don't work, then stay subscribed and notified, as I am currently in the process of making that video.